What's going on, everybody? Liam O'Reilly, Vermont economic realtor with Jerry Riley Real Estate. I hope you're doing well. Today, we're talking about investor sales. A new article out of Redfin just revealed that investor home purchases are down almost 50% year over year, which is pretty crazy when you think about it. But in relationship to where inventory is nationally, and certainly here in Vermont, that tells a little bit more of the story. So let's get into it here. Here's the title. Investor home purchases fell a record 49% year over year in the first quarter, outpaced a 41% drop in overall home purchases. Okay, so when you put that into perspective, it doesn't sound so crazy, right? Home purchases overall are down 40%, investors are down 49%. And this makes sense when we look at the market update and we see what's going on for home sales in general out of Redfin. If we look at home buyer housing payments, where a lot of investors, there's some investors that pay cash, or especially flippers, they might pay cash, but a lot of them leverage debt. And with where interest rates are and where prices are, relatively speaking, prices haven't come down significantly. If we go up to prices here, median sales price is only down 2% from a year ago. And mortgage rates are sitting at around 7%. If we go over to NFQ here, they're sitting at 6.75%. So it's a lot more expensive for the average investor to get into the market, which, it makes sense why we've seen a modest drop in investor activity. But relative to overall home purchases, the real headline here is that overall home purchases are down. And that's related to the sellers. There's not enough sellers out there. But let's get into the story and see what else we can learn from this article. So investors bought 18% of the homes that were sold, 20% down 20% from a year ago. So now I think that is a much more accurate reflection of what's going on in the investor home market, right? They're still buying up around 18% of all homes that are being sold, which is down from a year ago, but it's down 2%. So the amount of homes that they're buying has reduced by 50%, but they still have 18% of the overall market compared to 20%. This right here is a chart of the market. Now, something that I thought was interesting, right? I'm based here in Vermont, so we don't have a lot of national companies that are investing in real estate out here. It's a lot of local buyers, and a lot of the agents that Redfin employs that they interview here do represent clients and buyers who are national corporations, who are publicly traded companies, and are large home buyers. And so, when we look at some of these subjective examples from larger markets, it's been about 8 months since one of my listings sold to an investor. It's a Jacksonville, Florida Redfin Premier agent. So I think that's a pretty relevant piece of data coming out of Redfin here is their agents aren't seeing as many investor buyers, right? Even if investors are still taking up 18% of the market share overall on a national basis, they've still gone away. The amount of investors out there has been reduced. And when we look at the type of homes that they're buying, Redfin is, at least with this article here, isn't reporting on major multifamily purchases. They're reporting on these homes here: single family homes, multifamily, 2 to 4 units, condos, and townhomes. So condos and townhomes, if we look at this chart, make up about 12%, 13% of overall investor purchases. Condos, multifamily homes and townhomes make up about 13%. Multifamily properties were the least purchased asset type by investors, which I find very surprising. My guess is that has to do with the number of multifamily properties there are in existence relative to the other type of properties out there, right? There's a lot more single family homes than there are 2 to 4 unit properties. But you can see 67% of investor purchases were single family homes. So a lot of these single family home purchases are being made by investors. And if we look at what type of single family homes they're buying, 2 in 5 homes bought by investors are starter homes. So 40% of the investor purchases are starter homes. So they're right. And this has to go with higher interest rates, right? Higher interest rates means a higher mortgage payment, which makes it tougher to be profitable when it comes to rent. And the more money that you're borrowing, the larger your interest payment is going to be, the more expensive that debt is going to be. It compounds as you borrow more money. So logically speaking, it makes sense that investors are purchasing properties that are a little bit cheaper because it's easier to navigate with where interest rates are right now. Now, if we take a look here, all right, investors, so this is the market share based on property type. So investors have about 25% of the market share for the low price homes and about 15% for high price homes. So really, they're focused on lower price properties because of these interest rates, and you see it skyrocket really after the pandemic, but it remains high as interest rates stay high in 2023 here. So I guess the main point of this video, the main takeaway that I think you should have is you need to look a little bit deeper into these headlines. So if you just look at some of these charts and you look at, oh, investor purchases are way down, that could send a bunch of red flags that aren't necessarily there, right? I think a lot of the red flags that are out there are it has to do with the homes that are being sold, the homes that are being listed, as opposed to investors running away from the market, right? They still have a relatively similar share of the overall market than they did last year. It's just less homes are being sold in general. Something else that I wanted to point out here is if we look at some of these counties, right? Nassau County, New York, funny enough, that's where my girlfriend is from and where my girlfriend's family lives. Investor home purchases fell by 67.9% year over year in the first quarter. Right there, that was the largest market to see investor home purchases fall, almost 70%, which is crazy. But if we scroll down a little bit and we look at the market share, investors gained the most market share in Baltimore, up 4.6 points from a year ago. Next came Nassau County, 4.3 points. So they were down 67% year over year, but they have more market share. They have 4% more market share than they did last year. So yeah, there's less investors purchasing homes right now, but there's less people buying homes right now because of these higher interest rates. There's less people selling homes right now because they don't want to move and give up their low interest rates. So naturally speaking, there's going to be less investors purchasing homes. So I just wanted to go over this article. I think overall, there's not a whole lot of news here. It's really the same thing that we've been talking about. Inventory's down overall, which is causing less sales than normal, and obviously less buyers, less investors can purchase those properties because there's less homes for sale. So anyway, let me know what you guys think. Do you think this is a bigger issue than I am giving it credit for? Let me know your comments in the description. If you're looking to buy or sell a home here in Vermont, all my contact information is in the description. Reach out to me directly. If you're looking in another state, reach out to me as well. I'd be happy to find you a great agent who knows what they're doing. Other than that, enjoy the rest of your day, guys, and I'll see you in the next video.